Hello, guys, and welcome to the show. Today is Good Friday, I guess, Friday the 30th of March, 2018. And listen, I wanted to do a visual presentation of the charts and everything to try to give you guys an idea of what I got in mind in the time frames and everything according to charts, what I think is going to actually happen in the very near future. Probably within 2018 time frame. It's all going to happen. It's the whole thing is just going to basically a meltdown of the system that the world's central banks are actually going to have to respond to. They're going to be forced to respond to. Their reaction is going to be nothing else less than spectacular. The central banks, how they're going to react to this. And that's that reaction that's going to send the markets up, 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 up. It's going to send everything up. But what's going to happen, I'm going to put on these charts what's going to happen to gold and silver. Of course, I'm going to do gold and silver at the end. So you have to wait for it if you're a gold and silver person. I'm going to do cryptocurrencies, what's going to happen to cryptocurrencies. I'm going to do what's going to happen to the dollar on these charts. I'm going to do what's going to happen to the stock market and all the other markets. Now, when I write the stock market on here, I'm covering the Dow Jones, but all the other markets are going to respond in the same fashion. They all follow the Dow Jones's lead, sort of like Bitcoin is synonymous for cryptocurrencies. All the other cryptocurrencies follow Bitcoin's lead. So when I say Bitcoin, I'm talking about cryptocurrencies, and when I'm talking about the Dow Jones, I'm talking about all the other markets following. They all follow the lead. They follow the leader. So anyway, I've drawn it all in charts, what I think is going to happen in the very near future. When's it all really going to get started? Well, I believe that it's all going to get started when the U.S. 10-year passes 3.25%. Then we're locked and loaded. It's like when you load up your weapon, it's ready to fire. I don't believe the weapon's ready to fire. I don't believe this situation's ready to happen until the U.S. 10-year gets at 3.25%. And so the next round of bond selling, I don't think the buyers are going to be there anymore, and we're going to see bond prices bond yields start to rise toward 3.25%. But I don't think it's really going to make it there for a little while yet. I think it's going to take a little bit longer to actually get there. I think it's very possible it might take until the next time when the Fed goes up to $40 billion a month. I think that's when we might exceed that 3.25%. And that's going to come, let's see, in August, I guess, somewhere along in there, August, September. So we're probably setting up for a fall market crash, really, to tell you the honest goodness truth. I think that the market's just going to continue to plod along until then, with no real big falls, and people buying on the dip and people continuing and the market's I think it's not really going to have this big crash until we hit 3.25% on the U.S. 10-year. Watch that 10-year, the U.S. 10-year. Watch it. That's what's going to tell us when we're going to have our crash. That's the thing. 3.25. Once we get there, then we're ready. Now, I could be a little bit wrong on this. It could actually happen a little bit sooner when we cross the 3% margin. We're in danger territory once we pass 3%. But 3.25 I'm really giving it the benefit of the doubt. So in my mind, without a doubt, we're in that area where it could go once we hit 3.25 on the U.S. 10-year. So these charts are going to be very interesting. Let's get it all started right here. Welcome to the show, guys. We're going to get right into it. What we're going to do is we're going to actually start the charts right here. Now, here's the thing. This is voice only for right now. What we're going to do is we're going to show you guys how cryptocurrencies is going to fare. And we're going to show you guys how I think the stock market's going to fare. Now, first off, I want to have a little disclaimer that this is not financial advice. What this actually is I'm going to try to explain to you how the stock market correlates to cryptocurrencies and what I think is going to happen in the very near future to both cryptocurrency and to the stock market. And so without further ado, let's get on with it. First, what I'm going to do is I got it in MS Paint right here, so I can actually draw on this screen in real time, and you're going to actually be able to see what I'm drawing. So I better get a pencil here. I'll get it in blue, the same as the stock market and what it's doing right now. And I need to get a pen to draw with. I'll use a crayon, and I'll set the size down about the size of what they got here. And so, is it in blue? Yeah, it's in blue. Okay, so I'm starting to start drawing what I'm going to think the stock market's going to do. I think it's going to start making these rather high. The highs would be higher and the lows would be lower, and it's gonna keep doing this for the next little while, and then all of a sudden we're gonna get a precipitous drop in the stock market, and we might get a little bounce, and then another big drop, sort of thing. This is what I think is coming up in the not too distant future from now in the stock market. Now, I think that when it drops below this line right here, now I'm going to use red to determine this line. We'll stretch a line right here, this line at 20,000. Okay. I think that once the stock market drops below that 20,000 line, now I'm going to draw in cryptocurrencies. I'm going to start drawing in the cryptocurrencies. And let's see, what color will I draw them in with? Let's try yellow, I guess. And we get a brush to draw them in with. So the cryptocurrencies, they had this lead up, rise up that was even bigger than the stock market. They went all the way up, all the way up, all the way up, all the way up to like $20,000. And then what we've seen is this fall in the cryptocurrencies all the way back down, you know. Now, I'm not drawing that accurately, but this is 20,000 up here. Let me get a black color, and we'll draw 20,000. So, way up here at the top for Bitcoin, $20,000, way up here at the top. Okay, and now we've seen this fall down here, and now we're down at this price for Bitcoin of what is it, 6,500 or 6,800 or whatever. Let's put 6,800, which is a massive drop in price. So Bitcoin is seeing a rise up in price and a massive drop. Let's go back to yellow so we can continue to draw this line. What I think that Bitcoin has done is, in the near term, down here where it is now at 6,800, I think it's pretty much made a short-term bottom, and I think that it could actually kind of try to climb a little bit, just for a very short period of time. You see on the end here, I've put this little titter upwards. Might start to climb. It's because it's fell so far from $20,000 all the way down to 6,800 roughly. And so it might actually try to rise up just a little bit again and have a little bounce because it's fell so far. But when this stock market drops below 20,000, this is what I call this red line down here. Now see, this is what I anticipate the stock market to do. This is going to create a fear trade. And when that happens, Bitcoin the fear is going to enter the market. And at that point, even though right now 6,800 compared to what it was at 20,000, 6,800 seems to be a massively low price. And this is why I expect it could bounce back a little bit, maybe up into 8,000, 9,000, maybe even $10,000. So we're going to put this line bouncing back up a little bit, heading back up just a little bit, because it's making, I think, a short-term bottom. When the fear trade hits and the stock market drops below 20,000, and that fear trade hits, I think that at that point we're going to see a massive drop too in Bitcoin. Bitcoin is going to go down with the stock market, right? And the two of them are going to go down simultaneously. And I think that Bitcoin is going to continue to go down, 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 down. Now, where will this bottom be? how low, when the stock market goes way down to its bottom, and we better go back to blue again, right? How low will the stock market go? Well, I'm predicting 12,000. Okay, so let's write that in here in black, 12,000. That's how low I think the stock market's going to go. 12,000. And I think that that's the point when the government is going to react to what's going on. And they're going to come in and they're going to say, hey, you know what? The stock markets fell not only below the red line that causes panic, but it's fell 8,000 below that. It's way down here on the floor, the stock market. They're going to come in and it's going to cause a worldwide crisis. A crisis like we've never seen before. A crisis in the credit markets, a crisis in the banking system, a crisis all across the board. They're going to have to come in because it's going to fall so fast. Just boom, boom. Down, 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 down. They're going to have to actually come in and they're going to have to respond to this crisis. Now, I'm going to draw it in blue. I'm going to draw the response. What the response is going to be, they're going to convene meetings and everything, and they are going to turn it around, and it is actually going to head almost straight up. Now, do you remember these guys like Cliff High predicting a $100,000 Dow Jones? And now at this point, everybody's laughing. They're saying, ha, 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 you know. They're saying wrong, and he was predicting astronomical prices for Bitcoin and everything else. And everybody is saying wrong, you know. Everybody's doubting him now at this point because of his predictions but you know what? Maybe we're a little bit too quick to laugh at his predictions of 100,000 Dow. Because when the government reacts down here at the bottom, right here, now you notice that the line now, the stock market's going straight up. Okay? And you notice the short time when it's at the bottom is going to make a V. It's going to be a very short time. And this is the government reaction right here that's going to cause this to shoot back up. The stock market is going to go up like you have never seen before in your life. It's going to pass its old highs, and it is going to be shooting for the moon. And the reason why it's going to be shooting for the moon is got everything to do with stimulus. They are going to be, and do not for 1 minute think to yourself that the central banks of the world cannot stimulate us out of a problem. And don't think that they won't do it. They will do it. And they will, when the push meets shove, right down here at the bottom, when that stock market hits 12,000, down 12,000 down to 12,000, the panic that's going to enter into the market is going to freeze everything. This is going to be a panic situation that's going to cause them to drive the market back up. Now, what's going to be the response to cryptocurrencies? Well, let's go back to yellow again. We're going to see that the cryptocurrencies are going to do exactly the same bounce. They're going to do exactly the same thing as the stock market's doing. And they're going to be on their way to infinity during this. But here's the interesting thing. And I mean, now that you've got the idea of what cryptocurrency is, so what we're looking to do really with these cryptocurrencies is we're actually looking to buy when the stock market bottoms. That's when we're looking to buy into the cryptocurrencies as well. Now, don't use this as financial advice. This is what my plan is, and this is what I think is going to happen. I think we're in for a stock market crash, and then I think that when the government reacts, the stock market's going to go up higher than it ever was before. And I think that the same thing is going to happen with cryptocurrencies. Cryptocurrencies is going to follow the same pattern as the stock market, except there's going to be a little delay. Now you notice this line when the cryptocurrencies come up here, right here, this line at the top. Let me put an arrow on it in red so you'll be able to see it. Okay, right here at the top of the cryptocurrencies, right there. Do you notice that the cryptocurrency did continue to keep going up a little bit after the stock market was falling? Notice that. So you notice right now being okay, I'll put another red arrow where we are right now at this minute with the cryptocurrencies. You notice between these two arrows, what I'm thinking is going to happen is a little rise up in the price of cryptocurrencies. This is what I'm half expecting before the big fall. Now the big fall is going to coincide just after the stock market fall, but it's going to follow the stock market down to a bottom. And you notice at the two concurrent bottoms that are going to be made here. One here in the stock market, and one here just, let me get the arrows in. One there in the stock market, and then one there at the cryptocurrency. You notice just after the stock market starts to go up, cryptocurrency is going to bottom and start to go up too. There's a slight delayed reaction between what the stock market does and the cryptocurrency. And so I'm believing that the cryptocurrency is going to be a slight delay with the cryptocurrency taking off again after the stock market takes off, after the reaction to what the world's central banks do. This has all got to do with reactions of the world's central banks. It's going to turn these markets around. So we're going to see possibly one of the biggest and most powerful and quickest rallies we've ever seen in the stock market once the government turns this situation around. But when the stock market goes down to around 12,000, or at the very least, it's going to go lower than 20,000. Probably at the very least, it's going to go down to like 18,000 when they react. And it's when they react that is going to send everything going back up again. So Dow 100,000 is not out of the question, because now, if we take a look at this blue line, which is the Dow, and I'll go back to blue again. If we start to look into the future, after this initial rally, it's not going to go up quite so fast. Let me get a brush. But it's going to continue to go up. But it's going to be more vaulted. It's going to be more of this sort of a thing again. Off into the future, it's going to continue to go up. So if we were to extend this chart out into the future, say 2 or 3 years, Dow 100,000 is a distinct possibility. But then this yellow line of Bitcoin is going to continue to do the same thing as this Dow is, up, 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 up into the future. It's going to continue to do that too for years, for the next few years, as monetary stimulus just keeps pouring into the system. Well, what's the dollar going to do during this period of time? And this is the interesting thing. Let's follow the dollar. Well, what color will we pick for the dollar to try to display the dollar? Well, let's pick gray here, because gray's a good color to pick, because I think that we'll use a nice fat line, and because I really believe that it's a gray, bleak-looking outlook for the dollar. So we'll pretend that the dollar is been slowly losing steam. See the gray line I've drawn, and the dollar's been coming along like this, and it's been very slowly losing steam, down from 103 down all the way down to where it is now at around what is it? 90, 89, 90. So here's the dollar right now. Well, what's going to happen is when this crisis hits and the stock market actually falls, and see the stock market falling right here. I'll put in an arrow for the stock market fall. a gray. Well, we'll do again. A gray arrow's fine. There's the stock market fall right there. That's the center of the stock market fall. Now here's the dollar again. We come back to the dollar, and what it's doing. And the dollar during this stock market fall, it's not going to fall too. It's going to start to bounce a little bit, but not much. It's going to continue to bounce until it hits the center of the stock market fall, where the government reacts. Okay, so now it's bounced a little bit. Say it bounces back to, I don't know, I'm going to guess, 92, 93 on the US dollar index, during the massive precipitous crash in the stock markets. It might bounce back just a little bit. Okay, what's going to happen when the government actually reacts and they actually turn the markets around, including Bitcoin and including the stock market and all the stock markets, by the way, not just the Dow Jones, but all of the markets going to shoot up to the moon, and Bitcoin shoots up to the moon after this government reaction here at the bottom. Well, what's going to happen to the dollar? Well, okay, let's go back to the dollar and we'll watch what's going to happen. It's going to plunge. It's going to be on its way down, down, down to hell. And there's going to be no stopping it. Let's put an arrow showing it which way it's going here. Down, 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 straight down to hell, the dollar. And if we extend this out into the future, we're going to see that this downward trend for the dollar is going to actually accelerate once it gets down to 70,000. So let's mark the point here on the chart of 70,000 for the dollar. Let's put another red arrow here at 70,000 for the dollar. I mean 70 on the US dollar index. Let's say this red arrow right here, this big red arrow, is 70. Then it's going to plunge even faster, and it's going to pick up. So now, if you've been following this chart, I hope this somehow gives you a little bit better idea of how I think all of this is going to actually follow in. And if you've also been following what I've shown you here, you'll notice that our point, our position right now, right this minute on the chart, I'll point out where we're at. Let me get the arrow. We are right here. See the red arrow I just put? That's where we're at right now. So you see, all of this action is going to start very, very soon. And this is where we are in the yellow line on Bitcoin. So I'm expecting a very slight bounce in the price of Bitcoin. But I'm expecting the stock market, if you follow this chart, the stock market to make lower highs and lower lows until all of a sudden a fall. This is what I'm expecting. And you notice that all of this is going to occur not too distant in the future, just within the next few months. I would say it's going to definitely occur probably before the end of this year, if the Fed continues on its course. Now, I want to talk about one other thing. The Fed, there's a lot of talk that they're buying all of the bonds. I'm not so sure. I think that there's been a whole bunch of bond buyers that's come in because they've been hunting for yield. I think for so long, you see, you have to understand that the U.S. Treasury is considered to be one of the safest haven assets you can buy that's going to give you a guaranteed yield. And so we've had these yields so low for so long that all of a sudden when the yields go up like that, these buyers say to themselves, hey, you know what, a bargain. And, they can't resist a bargain, and they're been coming in and snatching them up. But you have to understand about buyers. In any market, I don't care what market you're dealing with, if you get a bunch of initial buyers coming in, there could be nothing in behind them. In other words, they come in and they snatch whatever they want. They buy it all up, and they've spent their money. Nothing can come in behind them to shore up the market after they've all made their purchases.
So this might be what's happened with the U.S. Treasuries, is these initial buyers coming in have come in and they've snatched up all of the what they wanted, which was the bonds that were yielding more, and now they've dropped yields back a little bit. Yields have fell a little bit again. Yields aren't as high as what they were. So the next big treasury sale that comes up next month, what's going to happen is the buyers might not be there anymore. And so really, yields did not fall significantly, even with all these buyers. But what's going to happen when the buyers are gone next month? What's going to happen then? Well, then we might see a significant rise in yields. And if you remember what I said, I marked it at 3.25 as the point where we're going to see this market drop. So the next treasury sale might yield a significant rise, but I don't think we'll make it up to 3.25 on the 10-year. It might go up quite a little bit though. I don't think we're going to see that for a couple more months. So this arrow, when the markets really decide to actually fall, let's draw an arrow in for that. Let's say we're going to use a yellow arrow to draw where the real fall starts, which would be right here, the real precipitous fall. This could be actually out into our future in August or September or this fall. It could be that far away. It might be a few more months away. It might be next month, but it's going to have to do when the U.S. 10-year finally hits 3.25%. So I've been keeping my eye on that U.S. 10-year, and it's been dropping back to 2.7, what is it, 2.74 right now? It has to make it all the way up to 3.25 in my mind before we're going to get this precipitous drop in the stock market, and indicated by that yellow arrow I just put. So we have to extend that out into the future until the U.S. 10-year hits 3.25%. Then we're ready for that big drop that's going to trigger the reaction by the Fed, because when the stock market drops below 20,000, that's when the Fed's going to be getting ready to react. I don't necessarily think that they will react when it drops below 20,000. I think that they will still continue to hold course when the stock market drops below 20,000. I don't think they're going to react until the stock market gets down like, I don't know, maybe 16,000 or something like that. Then they'll start preparing to react to the situation. And it'll continue to drop while they're reacting. They're going to have to close the markets in the end. When the markets probably get down and start to head down toward 12,000, they're going to have to close everything up. It's going to freeze the entire credit system, because banks will start failing. Everything will start failing. Everything will start seizing up on them. And they're going to have to come in with a panic reaction. It's that panic reaction that's going to send everything skyrocketing on the other end, because that panic reaction is going to be what I would call overcooked. They're going to overreact to the situation. They're going to do stimulus like we've never seen stimulus before. They're going to have to bounce this thing back. And because it's going to require such a strong reaction, that's why we're going to get such a strong reaction upwards on the other end. You see what I'm saying? The amount of money that they're going to have to stimulate in. When they get into a panic, a real crisis, that's why they're going to react so vehemently and so hard. And they're going to hit it so hard with so much steam on the other end. So I hope you understand better what I'm talking about now. That Cliff High, with his $100,000 Dow predictions, a couple years into our future, he might not be so far off, because we're going to be talking about how the Dow responds to a hyperinflation. You notice this gray line indicating the dollar's going straight down to hell. Extend that line out into the future, and once the dollar goes below 70 on the U.S. dollar index, it's going to be all over. It's just going to drop like a stone. And so is prices. Everything is going to be denominated in dollars. This is going to actually quite literally destroy your bank account when this happens. if you're in dollars. So listen, thank you guys for listening. Oh, I forgot. I never discussed on this chart what's going to happen with gold and silver. Did I? Well, that's the easiest one of all. I'll use an orange line, and I'll use a big fat pen here to put gold and silver. Gold and silver have been right now meandering along basically like this, right? Okay, not really going much of anywhere. I know these guys are saying, oh, gold's going up, everything's going. No, it's staying around 1300 and something. Low 1300s. 1300 and change for gold. And silver's been running around 17 or 1650 along in there. So it's been running along like that, right? Well, when this crisis starts to hit and the stock market drops, gold and silver is going to start to go up slowly, like this. See? Not real fast. It's going to start to go up slowly. Okay, like this. And then what's going to happen is at the bottom of the stock market crash, when they do the stimulus, right here, when they do the stimulus, this is what's going to happen. You see what that line just did? That's what gold and silver is going to do. And it's not going to stop. It's going to be up like that. You see where it's going? It's going to be the opposite line of what the dollar's going to do. The dollar's going to be going to hell. And the gold and silver is going to be doing exactly the opposite direction. It's going to be like two elevators, one going one direction. So the gray one's the dollar going straight down to hell, see? And here, this orange line is what the gold and silver is going to be doing, going straight up to the heavens. This is going to be the two opposing reactions of gold and silver. And silver is going to be the better one of the two. So if you see, I drew in here the yellow line for cryptocurrencies, and cryptocurrencies doing rather well, like the stock market's going to do rather well after the government reaction. It's going to be nothing compared to precious metals. So where you really want to be, the easiest place to really do good in all of this is going to be silver. Because it's a lot of work. You got trying to buy Tezor wallets for your cryptocurrencies and trying to keep them safe and trying to buy them is hard. And it's a lot of work. Cryptocurrency is a lot of work. And which one do you buy? And they're going up and down. And they're so volatile and everything else. It can be a bit of fun. And I would say to you guys is to dabble in it a little bit. Go out there and stick your toe in the water and try the cryptocurrencies a little bit and have some fun with them. Maybe buy yourself a little piece of this coin or a little piece of that coin. Not more money than you'd spend on a lottery ticket. But you want to get in there and don't miss out on this silver. Silver is the buy of a lifetime right now. And you can hold it in your hand. This is the beauty of it. You can't do that with a Bitcoin. Where's your Bitcoin? So go ahead and play with your Bitcoin a little bit and look at it on your computer or put it in your Tezor wallet or whatever, or have a little bit of fun with it. But really consider silver because you can hold the silver in your hand. It's got no counterparty risk. Everything else has got counterparty risk. So listen, I hope you enjoyed this visual of what I think everything's going to do. And you guys have a real nice weekend and have a great Easter. And we're going to catch you probably on Tuesday, starting with the next market report. Have a great long weekend. And it's time to break out the barbecues. Spring is hitting. And really, thank you guys for the great year it's been the last year. And we'll be back Monday with a market report. Bye-bye for now.